Hey everyone, and welcome to The Explainer. Today, we're diving into one of the wildest, most jaw-dropping stories in recent finance. The absolutely insane rise and even more insane fall of the Terra/LUNA ecosystem. So yeah, let's get right into it.
Just look at this number, $40 billion. I mean, think about that. At its absolute height, that's how much value was locked into the Terra project. This thing wasn't some small experiment. It was considered a pillar of the entire crypto world.
And then, poof, in just 1 week in May of 2022, pretty much all of it just vanished. So the big question, the one we're going to break down right now, is how on earth does something that massive just collapse?
All right, to really get how it all fell apart, you have to first understand the idea behind it. And honestly, it was a brilliant idea, but also a really dangerous one. See, Terra was trying to solve one of the biggest, most fundamental problems in all of crypto.
And that huge problem? It's volatility. I mean, just wild price swings. You can't really use something like Bitcoin for everyday stuff, right? You wouldn't want to buy a coffee and find out you accidentally paid 30% more by the time the transaction cleared. It's just not practical. And that's where this special kind of crypto called a stablecoin comes into play. They're designed to do exactly what the name says, stay stable, usually pegged to $1.
Okay, so most stablecoins are pretty simple. They're backed by actual dollars sitting in a bank account somewhere. But Terra's stablecoin, which was called UST, was totally different. It was an algorithmic stablecoin. So what does that mean? Well, instead of being backed by cash, it was backed by, well, by code. The dream here was to create a truly decentralized dollar, one that didn't need the old-school banking system at all.
And this slide really lays out the two different paths you can take. On one side, you've got coins like USDC. They're backed by real dollars, which is simple and you can generally trust it, but it's centralized. You're trusting a company. On the other side, you had Terra's UST. It promised total decentralization, all powered by this super clever algorithm connected to its sister token, LUNA. It was efficient, it was cutting edge, but it was also totally unproven.
So how was this magic supposed to work? It was basically a mint and burn machine. The protocol always let you trade 1 UST for exactly $1 worth of LUNA, and you could do it the other way around too. This created this beautiful, simple arbitrage opportunity. If UST ever, say, dipped to 99 cents, a trader could swoop in, buy a bunch of it cheap, instantly swap it for a full dollar's worth of LUNA, and boom, pocket a risk-free cent on every single one. That buying pressure was supposed to automatically, like clockwork, push the price of UST right back to $1. On paper, it was a perfect, self-correcting system.
So you've got this clever idea, but a clever idea is nothing without people actually using it. So how did Terra get billions and billions of dollars to flood into their system so ridiculously fast? Well, it came down to a single, incredibly powerful, and frankly, irresistible promise. Just take a look at this chart. In a world where your bank is giving you what, maybe 1% interest if you're lucky? Terra's main savings app, the Anchor protocol, was offering nearly 20% a year, and this was on your stable, dollar-pegged UST. For savers and investors all over the globe, this wasn't just good, it was an absolute no-brainer.
And you can guess what happened next. The money just poured in. I mean, UST's total value exploded from a couple $100 million to over $18 billion. Terra basically shot up the crypto leaderboards, becoming this absolute titan in the world of DeFi. It honestly looked like it couldn't be stopped.
But you know there's a but coming. Underneath all that explosive growth, there were critics, and they were pointing out some really deep, really scary structural flaws. The system looked like a fortress in a bull market when everything's going up, but it just wasn't built to survive a real storm.
And here's the core of the problem. The whole thing was totally dependent on new money constantly coming in to pay for the old money's returns. That 20% yield, it wasn't coming from some sustainable profit. It was a massive marketing expense, a subsidy being paid out from the project's treasury. And with more than half of all the UST in existence parked in Anchor, just chasing that yield, the entire ecosystem was basically balanced on the head of a pen.
And look, this wasn't some big secret that people only figured out after the fact. Analysts, people inside the community, they were all openly talking about these risks. People were literally calling it a ticking time bomb, long before it ever blew up.
And that, of course, brings us to the final catastrophic chapter. In early May of 2022, that ticking time bomb finally and spectacularly detonated.
It all started with a couple of huge withdrawals that knocked UST just a tiny bit off its dollar peg, but that was enough to trigger a little bit of panic. As more people started rushing for the exits, the selling pressure built, and then the peg didn't just wobble, it completely broke. The algorithm went into absolute overdrive, printing insane, mind-boggling amounts of LUNA to try and fix it, but it was just too late. The system was in a total free fall. And this is how the infamous death spiral worked. It's so brutal. The very thing that was designed to save the peg became the engine of its own destruction. The more UST fell, the more LUNA got minted. The more LUNA got minted, the more its own price crashed. And of course, the more LUNA crashed, the less faith anyone had that it could back UST. It was this perfect, vicious cycle of collapse, feeding on itself.
I mean, to really put this into perspective for you, LUNA's supply went from around 350 million tokens to over 6.5 trillion tokens. Trillion with a T, all in just a matter of days. The value of every single token was just diluted into nothingness, making it totally and completely worthless as collateral.
The collapse itself was incredibly fast and unbelievably brutal. But the fallout, and more importantly the lessons we've learned from it, well, they're still shaping the entire crypto industry. So why does this story still matter so much today?
Because this was not just some isolated event that only affected Terra investors. The Terra crash set off this massive chain reaction, a contagion that wiped out an estimated $400 billion from the wider crypto market. It was a major factor in the bankruptcy of several huge crypto companies. The shockwaves were felt absolutely everywhere.
So this whole disaster leaves us with some really timeless lessons, right? First, if a return on your money looks way too good to be true, it almost certainly is. Second, trust in a system that's just based on code is incredibly fragile. It has to be backed by something real. And finally, and maybe most importantly, never ever put all your eggs in one basket. Diversification is everything.
Ultimately, if there's one single truth that the story of Terra teaches us, it's this. Ambition, cleverness, brilliant ideas, they're not enough. In the world of finance, innovation without resilience isn't just a bad idea. It's downright dangerous.
And that really leaves us with this final, critical question to chew on. Look, Terra was a bold, ambitious attempt to build a better kind of financial system. Its failure forces all of us to ask, as we keep trying to innovate and design the future of money, how do we balance these revolutionary new ideas with that timeless, absolute need for stability? That's the real challenge. Thanks for watching.